as I mentioned, stock of the day is Carsales. It has boosted its payout, flagging earnings growth in the year ahead after full-year profit jumped a whopping 43%. It's been driven by acquisitions for US-based Trader Interactive and Brazil's Webmotors. Revenue surged 57%, over $780 million, final dividend of 32.5 cents per share. On the outlook, no numbers attached, but it says, quote, good growth will be delivered on a pro forma basis, with, quote, very strong growth on an actual basis on both adjusted earnings and revenue, with margin expansion as well on a pro forma basis. We spoke with the CEO a little bit earlier on today.
Our guidance approach has been consistent over the last 13 years, and we like to guide, I guess, on this basis. The market understands what our guidance means. We don't like to put tight numeric ranges there, but the market understands what our outlook statements actually translate to. So we're comfortable doing it the way we are.
Okay, so didn't get any numbers in there. The market, though, is liking this result. So, Mathan, I'll start with you on, I guess, the commentary around those outlook statements. So, making the assumption that the market knows what they're thinking, what's going to come.
Yeah, it's a bit tricky, and I can understand the dilemma for corporates. There's a lot of macro moving around, and especially the old techs, the REAs, the Carsales, the SEEKs of our market have global expansion, global exposure. So there's a lot of moving parts. It's tough to give an outlook statement in this market at the best of times. So it is tough. They've done well. I guess the car prices, inflation has really helped them, and that's played well. The car, I guess if you look at the average price of the two online players in REA and Carsales, both of them are quite elevated, and they've held elevated for a lot longer than what most people thought. So that's helping them. They're doing well. They're well managed. They've got a good diversified exposure. I think they hold up well. It's tough to see value in any of them. I actually think the third one is interesting, SEEK. That's probably underperformed the other two. And so if you're thinking overall the thematic holds up relatively well, the economies actually hold up, SEEK is probably a better play. But I think, look, it's hard to go against people like Carsales and REA because they have a number of leverages to play. They can pull a lot of levers to keep the growth rate going. They're not going to get blown away, and they're a diversified model. So hard not to like them, but yeah, I would not be chasing here. If you want the same thematic, if you think the overall macro holds up, then SEEK is probably a better play for you.
Okay, so you would hold Carsales if you owned it, though?
I would hold it.
Yeah.
I think I think all three of them are proven global models. You just accept the fact that they're cyclicals, they'll be up and down, but you can hold them through the cycle.
David, buy, hold, sell for Carsales today?
Yeah, very, very similar view. We've got a hold on them. Think that they're an excellent business, very, very well managed, and that result shows that they can deliver and that they're doing very, very well. But yeah, as Mathan said, the valuation probably doesn't hold up at current levels. We've got a fair value on them of about $23, so they're currently trading above that. Now the analysts may well look at today's result and readjust that, but at the moment got a hold recommendation on it. But it is in the right space. We are seeing that. Yeah, we mentioned consumer sales earlier. The car sales around Australia have been holding up very, very well. June and July were very, very strong months. So that is part of the economy that is performing better than general discretionary sales. So it is in the right sector, but probably share prices, a little bit too high at current levels.
Got it. Thank you. Just a quick one. Do you like SEEK?
We actually just downgraded our recommendation on SEEK last week. So we've put a sell recommendation on it. We had liked it, but tending to think that there is actually better value in the likes of Carsales. But we've also got a light and on REA Group. So we tend to think that the market's probably run these stocks up a little bit too high. When you look at all of them, they're trading on very, very lofty PE and low dividend yields. So probably wait for a bit of a pullback in their share prices before re-entering this technology sector.
Thank you. All right, let's get